Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, October 21st, 2010. Well, as you can see from the intraday 10-minute SPY, which mirrors the S&P 500, the markets have been on a pretty wild ride today, coming back into gap fill as we speak. And again, there's been some great moves in this market, although it all is on very, very light volume. What is the culprit behind this market move today, both up and down? The US dollar. And I want to make this clear, folks. No one out there, I don't care in the media, what analysts are out there, should be no question in anyone's mind that this market is pure and simple a trade inverse to the dollar. Now, again, do you want to know why? Well, take a look. Look at the markets move today. Initially, we moved higher in the markets, then we sold off, then we paused and sold off more. Take a look at the intraday UUP. The UUP going intraday is in the exact opposite. Initially, the dollar went lower, then higher, then paused, and then higher. This is exactly 100% opposite of what you're seeing on the Spider's intraday chart. And again, take a look. Remember, dollar went lower first. That means the market should have gone higher. Did it go higher? Absolutely did. All right, then all of a sudden, the dollar reversed to the upside right here. What happens to the markets? The markets should have gone down, right? Let's take a look. Yup, they sure did go down. And then all of a sudden, the markets get a little bit of a pause and a float. Why are they getting a pause and a float? Because the dollar is floating sideways to lower. That's exactly what should happen. Then the dollar has just surged to the upside, going positive today. And what does that mean? It means the market should be selling. And did the market sell? Yeah, it sure did, and is continuing to sell as the dollar continues to hammer at the highs of the day. So a perfect inverse relationship continues, and anyone that tells you it's different, anyone that tells you it's based on economic news, anyone that tells you it's based on earnings news is full of it. And if you're listening to them, I hold you dear in my heart because ultimately you will end up losing money in this market. It is a dollar trade, folks. That is as simple as it gets, a dollar trade. Now, again, market inching up. The key levels, again, very interesting. You can see the high of the day right here at 119, just above 119. If I take that even number and draw it across, you can see clearly that that's what we pierced. The 119 happens to be what's called an even number play. It's a proprietary technique that we have designed in the Money Stocks in the Research Center for those of you that are members and in the intraday stock chat. We use it and talk about it very, very often. Now, again, the market initially getting that big surge up. We take out the pivot double top. You can see right here, see this gyration right here where you get a pause candle and then another pause candle before we shoot higher? That is exactly because this was your double top going back right here. See how this area right here coordinates with this stall before you break through? You surge to the upside, and now the markets again have come back in, basically going to gap fill. We're getting a small bounce right now. And why do you think we're getting a small bounce? Let me just throw this quiz question out to you guys. Everyone watching this video, why do you think you're getting a little bit of a bounce right now? The answer should be the dollar is getting a little bit of a pullback or a small tick down. Well, let's go take a look. Let's prove our point. Well, let's erase it. Look at this. See the little tail on top? The dollar just down tick. Now the dollar's up ticking. Again, if we see this dollar pushing up, the market should come back down. So again, that's as simple as it gets, folks. Every up and down move in the dollar will again equate to a move in the markets in the opposite direction, and then the dollar comes right back in. So that again tells us that we should be seeing a little bit of a bounce on the SPY. And again, notice that right there. It's perfect inverse. You can't get any more inverse than this relationship. And again, that's the Federal Reserve's goal here, folks. The Federal Reserve wants a weak dollar. Weak dollar policy is what they want. They're going to get it in terms of whatever they have to do, which is printing trillions of dollars. It doesn't matter who it hurts in the long run. Obviously, currency wars are going crazy right now. I hope everyone understands the currency wars that are currently intact. You have China, basically raising interest rates, trying to fight the issue with the dollar. By the way, what had happened to the dollar when the Chinese raised interest rates? The dollar went higher, right? Do the Chinese want a stronger dollar? Yes. Why? Because they hold trillions of dollars in debt of U.S. So every time the dollar goes down 10%, they lose 10% of what they've taken in U.S. debt. So they're actually losing a lot of money by the dollar dropping. All right. In addition, they tie their currency to the U.S. dollar. So the cheaper the dollar gets, the cheaper the yuan gets, and therefore their exports compared to all the other Asian countries are getting cheaper and cheaper. That's another major issue. I mean, this is just huge, folks. It goes from Brazil to Asia to Europe to the U.S. All over the world, currencies are the major issues. G20 meeting this weekend as well will be a monstrous thing. Now, again, market getting a little bit of a small positive bounce here. Notice the trend line it's off of. Next spot's going to be your gap fill right down here in your 200 moving average. Again, volume is extremely light today. Only 112 million traded on the SPY. We have to watch that very closely. Leading stocks today. Earlier in the day, Chevron was a leader. It still is, but it has rolled over, as you can see. A little bit of a nice double bottom on the chart right here. That's a beautiful little intraday double bottom. ExxonMobil, same thing, just higher during the early morning session, was leading the market, has rolled over. Oil and gold are both lower, which I want to explain. Many of them might say, well, why is gold getting hit so much here? And again, for those of you that are short gold with me, congratulations. We are doing very nicely here as it continues to get pounded. But think about this. The dollar is slightly positive. Right now, the UUP is up 4 cents. It's 2 cents off the highs now, so it's continuing to pull back, which tells us the market probably is getting a little bit more of a bounce. But having said that, you have to understand the other factor here, which is gold and oil are both getting hammered, also because of China GDP last night. China comes out with some poor numbers on GDP, showing not as good growth as people expected, and I think that makes everyone believe the global demand issue is kind of a little bit overdone here in terms of commodities. So yes, the dollar is putting some pressure on. By the way, dollar right back to the highs of the day. There's a good bid right now underneath the dollar, folks. We may have seen a short-term bottom in the dollar over the last week. That's looking more and more probable. Again, the Fed is going to fight it with all they can, but they might be at a point where they want to let the dollar go up just a little bit, and then maybe after the elections hammer it down again. We'll have to watch that very closely. And again, you want to be part of the research center here, folks. This is what it all comes down to: knowing what's going on in the markets, so you can trade what's going on in the markets, so you can make money in the markets. Okay, let's go back to the SPY. Market again just getting a pause here. Dollar again pulling back a little bit. Still can't get through that high of the day. And you're creating a little bear flag now. Although again, there's a lot of support. I want to make this clear, folks. Down here, tons of support. You have gap fill right here. And then you have the 200 moving average. So anywhere between 117.70 and 117.80 or so, there is a ton of support on this market. If it does get down there, you can scalp it. Again, the levels work beautifully as scalps. I mean, just think about it here, folks. Take a look. Right here, you have this 50 moving average and these two green lines. What happens? Market bounces up, then goes sideways, bear flags it, and pulls back. Then it goes to this blue line. It gets a small bounce, and it could again get a little bit more of a bounce over the next few minutes to make some more money on that scalp. These trend lines are there for you to use so you can profit off of them. All right, knowing this level right here, you stall and you pull back. You go right into it here, and you get a red candle. That's a scalp. Then again, look at this. You go right up. You go to your 119 even number level, which again, 119 should always be known as an even number. 120 is an even number. You can use them to scalp. Again, on a pierce, I wait for the pierce. You want to look for the pierce and look at the pullback you got. So every level, again, working beautifully. Again, keep an eye on the dollar. The dollar seems to continue to want to stay right around the highs of the day. Market down ticking just a little bit here. But again, it wouldn't surprise me if we go up a little bit and then flush down to the 200 moving average and gap fill. It does make a market seem like it wants to go to gap fill at this point. A stock I highlighted on the blog today, folks, Southern Copper. All right, Southern Copper had a good surge on the initial candle and then fell back down. On the daily chart, when it was right here, I put out an article on the blog, and you can go read this on the blog, folks. I put out an article saying this looks like a topping tail. This could be a sign of a top on the Southern Copper chart here. Not only that, but we also heard from China last night and some of these other issues, plus the dollar's trading up. But these can all be signals that a top could be in on Southern Copper. Take a look at your daily chart based on a topping tail. Pretty ugly candle right there. This stock technically should come all the way back in here. This is my overall target right here. See your gap fill and 20 moving average will be moving up into that. That's my overall target at $38.75, give or take. Again, that's where I think this Southern Copper, if this is the top in Southern Copper, that's where it should pull back to. All right, before it gets a little bit of a bounce. So watch that over the coming days. And again, I highlighted that on the blog. You can go read the article. And again, what time it was put out. The stock has actually, believe it or not, Southern Copper was basically up 10 cents when I put out that article. It's now down 75 cents. So beautiful call right there. Just another feather in the cap here. And again, for those of you that, may be missing something on the blog or you don't want to follow the blog, just go to the Research Center, folks. Every night I cover a 40-minute, 30-minute video live in that. I go over the charts as I see them, as I'm living and breathing them, giving you guys ideas. Pro Trader Watches, hot charts and alerts, daily market report, technical tactics, and obviously No Hype Live broadcasts, all inclusive there in the Research Center. All right. Now, again, great fall on Southern Copper. Goldman Sachs is down 23 cents. Goldman, again, having a decent day considering where it was earlier. I mean, it's still up. Or still was up earlier, but did come in here right on the 50 moving average. But remember, the Goldman Sachs chart has had a monster move on earnings over the last couple days. All right, Caterpillar reported earnings this morning. Caterpillar is getting hammered. Look at Caterpillar today. What a reversal on this stock after gapping up on earnings. Unbelievable reversal there. Again, a couple other stocks reporting earnings. Netflix had good earnings yesterday. That stock is having a huge day, gapping up. And the low of the day, by the way, where's this low of the day coming from? Got to scan back right from this pivot top. See this line matching this top? That's the low of the day today, and look at the move off of it. I love how charts work, folks. If you're not a trend line, drawing master, or if you don't really focus on trend line analysis, I think you're honestly missing everything. This is trend line analysis is about 85% of everything that I do here, and that's what makes me an 80 to 90% success rate trader. All right, so in all the other words, folks, again, markets continuing here. Dollar, by the way, just hit a new high, but did pull back a little. Let's see what's happening. As the dollar's pulling back, it looks like we're getting another little bounce in the markets, and it's still holding steady right there. It upticked to the new high and then pulled right back, and the market's bouncing right off of this level as well. All right, folks, that's all for today. Have a great afternoon. Join the Research Center. Join the chat room. We'll see you soon. Take care.